for tuning in to the update with Oakwood Financial Group. I'm Joshua Dobi. Appreciate so much you taking the time here to sit with me for a few moments and listen to some of the things that we're seeing here that are going on in the markets and in our economy, and perhaps even some things we can anticipate before the year end as we're looking out here over now just crossing over Labor Day, if you could believe it already. And we're going to be racing towards the year end here before you know it. So pretty amazing stuff. I want to be respectful of your time though, so let's go ahead and dive right in. First of all, you've heard me talk a lot about over these last 18 months or so since we've had the shutdowns due to COVID-19, about unemployment rates and about what that means for our economy. I'm going to talk a little bit about that here, primarily though to highlight a singular angle on it, and that is we are seeing some very good numbers as far as the reductions in new claims and continuing claims for unemployment insurance. That's great to see. We're definitely in a space where we can call it a trend line at this point, and I'm really glad to see that because that portends a lot of very positive things for our economy, specifically that we're getting more folks back into the workforce. That being said, the most recent data that I have says that we still have over 7 million open jobs that are posted, that are advertised, that employers are literally needing to hire today and can't do it because of lack of folks who are both qualified and then actually even applying for those positions. So over 7 million jobs still open, a lot of needs still out there, but thankfully those unemployment figures are coming down. We are also in this coming week going to have the end of what I have called the bonus unemployment insurance. So that probably is going to push some additional folks back into the workforce as well. It'll be interesting to see how it affects that open jobs number. Like I said, that's over right now, according to the data that I'm reading, over 7 million open positions at this point. It's going to be real interesting to see how that gets affected here over the next days, weeks, and months. Hopefully in a very positive way, because what that can mean is then companies can then go back to meeting some of the demand aspect that they haven't been able to do because of a lack of ability to hire. I don't need to tell you, if you've been to a restaurant, if you have been to a hotel or a sporting event that's had limited capacity, I don't need to tell you, if you own a small business and you're trying to hire and you have demand up over here, but you can't hire the folks that you need over there, it is incredibly frustrating, and it also could result in lost sales and lost revenue sitting out there. So you multiply that by thousands, tens of thousands, hundreds of thousands, and you're talking about a very measurable impact to our economy. So I'm hopeful that this turn here over the next couple of weeks, that we're going to get some of those positions filled, and hopefully that'll mean very good things for our economy. That being said, it has been a very positive year for our markets to this point, as measured by the most popular indexes that are out there. S&P 500, Dow Jones Industrial Average, NASDAQ Composite. It has not been a good year for holdings in more alternative assets like gold and also the long U.S. Treasury or the long duration U.S. Treasury. Hasn't been a good year. As a matter of fact, negative in both instances there. Those aren't the only asset classes out there. Those just happen to be some of the most popular ones that we see, and we thought particularly relevant to giving some indication about where things are. But of course, that then begs the subsequent question: what do we think is going to happen for the balance of the year? Well, I'm going to give you a terrible answer. I don't know. There's no way that we can know with any certainty. There are some things that we can see, though, that are sitting out there, and that from an historical standpoint and just experientially for us, we know that tend to lead into certain trend lines. First off, we're not seeing anything from an economic standpoint that is particularly troublesome right now. When I say that, I mean in terms of the underpinnings of the economy, it's not running overheated or it's not moving in an unnatural direction at this point, even with the market moving in a pretty positive direction for the third year in a row. That being said, you've also heard from me any number of times about how we are due for a technical correction in the market. Technical analysis has to do more with analytics with charts, meaning about what averages are and what tendencies are according to charts. We're due for a technical correction, or more of a reversion to the mean. That could happen at any time. Frankly, I thought it would have happened by this point, but that could certainly happen at any time, and that's sitting out there. Now, we're not factoring in things like an unknown geopolitical event or things of that nature, which can shock the market in a very a very quick kind of fashion. Nothing that we're talking about here quantifies that, so that's always out there as a possibility. We're just talking about the things here that we can quantify. Now, we've had a number of developments from an economic standpoint, which probably, at least in the short run, are going to have both a mix of positive and negative impacts on the market. Specifically, I'm talking about these two gargantuan spending bills which are making their way through Congress at this point. Long way from them actually getting through both houses and making it to the president's desk. One of them, though, over $1 trillion, the other one over $3.5 trillion combined. We're bumping up against $5 trillion of spending bills. Yes, some of it has to do with infrastructure and broadband in rural areas and that good kind of stuff, but there's a whole lot of stuff in there. Frankly, I haven't even looked at all the things that are included in there. I'll just tell you that the small bill, the one that's right around 1 to 1.5 trillion, at this point is already 2,200 pages long. I don't even know how many hundreds of pages are in the 3.5 trillion bill yet. I haven't had a chance to see it online at this point. So, but I'm guessing it's got to be maybe twice, 3 times as big as the quote smaller bill. I still think $1.5 trillion is an unbelievably large number also as well. So when we're looking at that, we're thinking about, okay, what does that mean for us as an economy? What does that mean for us as far as the markets are concerned? And then, of course, most specifically for you, what does that mean for my portfolio? It's really too early to say at this point. However, just the generic math on things says that if we push through that kind of spending, which will be historic by a factor of 10, if we push through that kind of spending and it becomes law, we need to increase our revenue somewhere. And when I say increase revenue, that is a politically polite way to saying there has to be an increase in tax revenue. That's what funds our governments. That's the way that they, quote, make the money that they need in order to fund these programs. It comes from folks who work and who have gains and who pay taxes. So I expect that that's going to happen at some point. There was a lot more noise on that earlier in the year. Not so much noise on it right now, but I would offer up to you it is almost a mathematical certainty that will be the case at some point in the future, especially if something even remotely close to the size of these two huge bills eventually makes its way through Congress and is signed off as law on the president's desk. So all right, so what does that mean then for the balance of the year and what we're looking at? Well, you heard me say that I don't see anything that is particularly unnerving in the market right now. I think we're due for a technical reversion to the mean. When is that going to happen? I don't know. Could happen any day at this point. But I'm not seeing the kinds of unhealthy things in the market that sometimes preclude a significant pullback. That being said, there are portions of the market that are ridiculously overpriced right now. But that's always true. There always are portions of the market where when you look at them in terms of very conservative statistical analysis and market performance, are really ahead of the curve. And that can be a good thing when we're looking at our portfolios, but it also means that, again, there's probably going to be some reversion to the mean at some point. So that being said, also, there are some parts of the market which are undervalued. You heard me say that the long treasury and gold are both having negative years. That doesn't necessarily mean it's a good investment for you right now. It just means that they tend to be in a valuation place that is very different than, say, some of our smaller technology names, which have just had another banner year in terms of performance and probably are out over their skis, for that metaphor, when we're talking about their valuation and appropriate valuation. So I expect that there's going to be some jostling around before the year end. If these two bills make their way through Congress, I expect that the market's going to react to that as well. I think there are going to be parts which are positive. I think there are going to be parts which are negative. It's going to be kind of interesting to see what actually leads out, if you will, and actually makes the largest impact on the market. But I expect that that's going to be happening out there also. That being said, for all the things that have to do with your particular space, obviously everybody's space is unique and different, and there is no blanket answer to the what should I do question. You know me, I tend to be conservative. I tend to think more and move less. As far as planning is concerned and in making recommendations, I do think it's appropriate to make tweaks and adjustments, and then certainly to shift as trends shift. But day trading doesn't have a future. Never has. I shouldn't say that. For me, day trading doesn't have a future. There may be some of you out there who are wonderfully gifted at it, and I completely understand on that end of things. But it's very, very hard. I would offer up it's practically impossible to be able to guess what is going to happen in a given day. Trend lines, especially those that have a larger number of data points associated with them, tend to be healthier ways to make focus for your decisions that you make with regards to your portfolio. Friends, that's all that I have for this time. I'm going to end our time here today. Thank you again for your willingness to sit in and to listen. Always, 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 please feel free to reach out to me via email, give me a call. I always enjoy hearing from you. Happy to answer any questions that you have. I'm especially interested if you've got pictures of kids and grandkids going to school and first day pictures and all that good stuff, or perhaps you went to a nice vacation this summer. Always happy to chat about that as well. My two girls are now in 3rd and 5th grade, and they're back at school and doing some more normal kinds of things, and that certainly has been very positive to see. It's been a real struggle of a year for my Pittsburgh Pirates. I don't have any answers, folks. I know a lot of you are longtime baseball fans like I am. I hope you have some answers. I don't. It's been a tough season for the Pirates again. The Steelers coming through training camp here and in the first parts of preseason. I think there are some positive things and some negative things. We'll kind of see what happens. That's out there. But sooner rather than later, we're going to be ready and roaring back into football season. I'm especially looking forward to college and high school level interaction as well, especially as they're getting back to more normal kinds of game settings also. Well, friends, again, always feel free to reach out. Happy to chat with you at any time. And I look forward to chatting with you